Hello class, this is Dr. Fenton. In this video I'm going to show you how to work this last problem in Module 6. This last problem of course relates to questions 11 through 15, and one of you had a question about this, so I decided to go ahead and make a video to explain how to work this one. This problem is a very good problem to see if you understand how the various stockholders' equity accounts relate to each other. We are going to be talking about the various stock accounts that will total up to the total paid-in capital account. And then we have retained earnings here in the example, and also treasury stock. And you know that treasury stock is the company has purchased back its own stock. I think that's the last question where we have an item to work on it. Anyway, just for a refresher, you should know that we only place the par value of the stock into the stock account itself. So in this example, and this relates to the very first question, how many shares of preferred stock have been issued? Well, if you look at the example up here, and these numbers over here, these dollars are in thousands of dollars. So in reality, $6,000 is $6 million. So really this is $6 million sitting here. And if it's $1 par value per share, we can divide the $1 par value into the $6 million, and so the number of shares will be 6,000. Here's the explanation. Again, 6,000, which is really in millions, divided by $1 par value, and of course it's in thousands, so you would take this answer times 1,000, and so the answer is 6 million shares. So again, to repeat this, the only way we can get $6 million into the preferred stock account if we have $1 par value per share is to sell 6 million shares. For the second, or number 12 here, they're asking the same question about common stock. Work it the same way. We have $30 million in the common stock account, and if these are also $1 par value, divide $30 million by $1 to get 30 million shares. So their example here, to work through it, $30,000 divided by par value, $1, but then take that times 1,000, since the numbers in the balance sheet are in thousands of dollars, and so 30 million shares are the common stock shares that have been issued. Now number 13, if the common stock shares were issued at $30 per share, at what average price per share were the preferred shares issued? Going back up to the partial balance sheet, this total paid-in capital number here represents everything the company has received when it sold stock, preferred stock and common stock. And since we only place par value into the two stock accounts themselves, any amount the company receives above par value goes into the additional paid-in capital account. So when you add all these up, this is, as you see here, $1,200,000, which in reality, add 3 zeros, $1,200,000. This is the total amount they received for selling all of this stock. Let's go back to the question. If the common shares were issued at $30 per share, at what average price per share were the preferred shares issued? Now the answer is $50 per share. That's the average amount we sold per share for the preferred stock shares. Let's see how we get this. Now before we look at the answer, let's go back to the balance sheet here. And remember, all these numbers are in thousands of dollars. So really the total paid-in capital is $1.2 billion. But we can work this part of the problem, or this, problem number 13, without adding the 3 zeros. So we're going to do it that way. You can add the 3 zeros if you want, or keep them off. So, number 13 here. All right. The total paid-in capital for common stock is $900,000. Again, really this is 900 million, but we're taking off the 3 zeros. The 30,000 shares times $30 per share. Again, remember we took the 3 zeros off of here also. So the $30 times 30,000 is $900,000. And then what we do is take the 1.2 million here, take away $900,000, and so the amount that applies to the preferred stockholders is $300,000. So if you divide $300,000 by 6,000 shares, then you get a total issue price of $50 per share. That's the average amount the preferred stock was sold for. Now again, don't let this confuse you. I took off the 3 zeros on all these answers here just to, make it look better. But so this $300,000 is really $300 million, and you would divide by 6 million shares, but you get the same answer. So whether you add the 3 zeros, to this one, this number, all these, and this one, or not, you get the same answer. Okay, so there's a 50 per share. Now number 14, let's see. If retained earnings at the beginning of the year was $250 million and $30 million was paid in dividends during the year, what was the net income for the year? So what we're doing here in the retained earnings little section here, not really the section, but just a little calculation. They give us the beginning retained earnings. We usually add net income. We're given this. We're not now. We're being asked what this number is. We would take away dividends they gave us, and we get the ending retained earnings, the 288, up here, right here, 288. So looking at this schedule again, we need a number that's going to fit in here that will take us from the beginning balance of $250,000, or really $250 million, to 288. That's a $38 increase, but we have a negative 30 here. So what number will take us from 250? We take away 30 to get to 288, and you'll see that the only number that fit in there is $68. $68 million. We've taken off the 6 zeros out to the side of all these numbers. So if you put 68 in here, take 250 plus 68 minus 38, that will give you $288. So your numbers will be different, of course. So plug the numbers in here that are given to you. You'll have one that's missing, and then you just find the one that goes in here that'll make this schedule work out. And we have one more question. What is the average cost per share of the treasury stock acquired? Go back to the information. We have in the treasury stock account $352,000, and really, again, don't forget about adding 3 zeros out here. 11,000 common shares. So what we'll do is take this number and divide by this number. The dollar amount divided by number of shares, which they're doing right here. So the $352,000 divided by 11,000 shares, and so $32 per share is the answer for the average cost we paid for the treasury stock that was acquired. Again, this is a very involved problem. Once you work through it, and I'd like for you to work through it several times, but once you work through it, you have a better understanding of what these accounts are, what they mean, and how they relate to each other. Okay, well, that's it for now, so good luck with your studies.